Every weekday, the CNBC Investing Club with Jim Cramer holds a morning meeting live stream at 10:20 a.m. ET. Here's a recap of Tuesday's key moments. 1. Wall Street surged Tuesday on increased hopes of tariff deals following a wickedly volatile session Monday. The S&P 500 NASDAQ Composite advanced more than 4%. Short sellers covering their bets against the market could be adding to the buying momentum, Jim Cramer said, because those investors don't want to be burned if President Donald Trump announces trade deals in the coming days. If China capitulates or Trump comes to agreements that lowers tariffs with some countries, the market is going to be up substantially, Jim argued. Secure your ticket today for the CNBC Investing Club's upcoming third annual meeting on May 2nd in Orlando, Florida. 2. Shares have jumped more than 4% Tuesday as the stock tries to eat into its nearly 19% decline over the 3 prior sessions. Reports indicate that Apple is frantically trying to shift some iPhone production to India from China to avoid the higher duties on Chinese imports set to go into effect Wednesday, Jim said. India is set to face a 26% tariff beginning Wednesday, compared with what could be above 100% on China, if Trump's latest pledge of an additional 50% duty comes to fruition. The Wall Street Journal also reported Monday that there's been a wave of consumers buying new iPhones out of a fear that prices could rise due to tariffs. It's hostage to these trade deals. Will they get exemptions? Doesn't seem likely, but we'll see. Jeff Marks, director of portfolio analysis, said. While we watched this situation play out, Jim said, be patient with the stock. I'm not a buyer or a seller of Apple right here. 3. Goldman Sachs is divided on our 2 drug makers, Bristol Myers Squibb. The firm's equity analysts initiated coverage of Lilly with a buy rating and said the longtime club stock is poised to remain the market leader in obesity drugs in the coming years. Lilly shares, which have been hit hard lately, added more than 5% Tuesday, and Jim said he expects the stock to eventually work its way back to its highs of the year. On the other hand, the Goldman analysts put a hold-equivalent neutral rating on Bristol Myers, citing uncertainty on whether the company will successfully be able to fill in the revenue gaps created by losses of patents on key drugs. Jeff noted that Bristol Myers is sitting out the rally Tuesday, but that is not entirely surprising because the stock has acted rather defensively in recent weeks. So, when you get an oversold bounce, the stocks that are going to bounce the hardest are the ones that were hit the hardest, he explained. 4. There was no rapid fire at the end of Tuesday's morning meeting, climbed around 1,400 points, or 3.7%. The jumped nearly 4%, while the tech-heavy and